Well, there goes the bell, and it's about a 0.25% higher on the Nifty, just approaching 11,550. And again, about 0.1% higher on the Sensex. So it's not a hugely positive opening, but it's a positive opening. But much better for the Nifty Bank. It started about 1/3% higher, 100 points higher, 29,930. So absolutely within kissing distance of the 30,000 mark. So new highs being notched up for the Nifty Bank. Indiabulls Housing, as all our chart experts pointed out, should do well, is the best performing stock on the Nifty, up 2%. NTPC, Bharti Airtel also is moving higher. NTPC, Yes Bank, Grasim and Bajaj Finserv are the other stocks that are up almost 1% or a little more. Among the other gainers, JSW Steel, Hero Moto, L&T, Tata Steel, Bajaj Finserv again. Okay, Eicher Motors, Hindalco, Tata Motors are among the stocks that are up between 0.5% and 1%. What's the Red Brigade? Coal India is down about 2%. TCS 1%. I mean, the strength of the rupee, I guess, is telling on some of the IT stocks. Maruti Suzuki is down about 0.6. It's falling a bit every day. Adani Ports down 0.7. HUL, again, a sell from our chart experts, down about 0.5%. Bharti Infratel, Wipro, Reliance. Reliance is a little bit in the red, actually flat. Reliance is flat as flat can get. But mid-cap's doing just as well.
It's an okay start, you'd have to say. Start in the green, up about 40-odd points. The market breadth is good, 3:1 almost in favour of advances. Kansai Nerolac is the one that's getting hit hard. It's down about 3% after CLSA has downgraded that stock, citing demand concerns. Jet Airways is actually moving in the green. Finance Ministry sources have told CNBC-TV18 that banks are trying to revive Jet Airways to protect the interests of consumers and creditors. So let's see if anything comes out of that. Up almost about 2% right now. Jubilant Life is in the red. There is some news that perhaps one of their facilities could get under the FDA scanner. Jubilant Life now down about 1.5%. Apart from that, a couple of these stocks like NMDC, Dilip Buildcon also trading in the red right now. Some NBFCs like Cholamandalam, etc. coming in for some profit taking. And auto companies, Maruti Suzuki continues to be under pressure. So that stock too is something that you need to keep an eye out on. Now the market is moving a tad bit higher. So it's looking pretty good for the frontliners. 11,560 on the Nifty. HDFC Bank has hit a new high, by the way. So 2,300 now on HDFC Bank. It's up almost 11% this month. So big FI buying into some of these blue chip names is what you've seen. And, stocks like NTPC, etc. not doing that badly. Now the Nifty Bank is back close to that 30,000 mark. Ashwini, what have you made of the market opening? Looks like a solid opening. The Sensex now up over 130 points. What would be the first trade?
See, this looks like a trend day both on Nifty as well as Bank Nifty. So this is the time to get long. And chances are you will get fairly strong follow through. You were in a kind of a huddle for the last 2-3 sessions. So today looks like you're having a good breakout and one that will see follow through at least for the first couple of hours.
Okay. Well, at the moment, markets continuing to ride higher. Well, now actually put on a little more weight, 1/3%. Look at the Nifty Bank, it's up about 0.5% now. So it's almost bulls unstoppable or bulls unbound that we can see at this point in time. Financials clearly have a tailwind, no two ways about it. There is going to be extra liquidity globally, and it will mean also coming at a cheaper price. As you can see, the US yields moving down, Indian yields moving down. So financials definitely have a tailwind. Mitesh, what's your pick now after you've seen the markets open?
So I think a lot of stocks doing very well and seeing follow through on the upside. I think a couple of names. Asian Paints, I think, is showing good traction and continuation on the upside. So that could be a long idea with the stock just below days low of 1458. And Bharti Airtel, I think after a few days of consolidation is now showing signals on the intraday charts of moving up again. So 334.5 could be the stop loss, 360 should be the target.
Okay, one would have thought that the way crude surged yesterday, that Asian Paints should actually be negative. We thought crude sensitives would be hurt, but such is the money flow.
Absolutely. One would have thought that with such slow growth in aviation data, the aviation stocks would be in the negative, but Interglobe and Spice are actually in the green. Jet is also trading in the green. So, well, by the way, Interglobe and Spice, they've seen their market share gain because of the loss of Jet Airways market share. So that perhaps, is helping them. Look at SpiceJet now, almost 12% higher.
It could get something to do with whether it, gets a shy at jet, running jet. So, I mean, the market is full of all kinds of guesses. We haven't confirmed them, so we are not putting it on the table. But that's the kind of buzz in the market that maybe Ajay Singh gets a shy at jet.
Oh, absolutely. Prakash, would you buy into this rumor? Because, I mean, the stock for 2 days now has been running quite a bit.
I wouldn't know about the rumor, but certainly it's given good breakout. Good buying seen on SpiceJet on Wednesday as well. Looks like 100 was the target. Beyond that, I think 115 could be the place. Only thing is, where do you put a stop? Below 95? For 95 stop loss, 102, 5 rupees, 7 rupees stop for 115 target? Yes, perhaps yes.
God, the surge is like unstoppable. 12% higher on SpiceJet, and Jet Airways also up about 2%. Interglobe should also come up for you. Interglobe is in the green, but not as much as the other two. It's up 1% Interglobe at this point in time. So you can just gauge the mood of the market with this. That, you can get the most dismal airline figures, but the markets are just smelling that this is a temporary problem. And probably, what you have is the amount of people travelled in that. But then each of them is coming at a higher seat price now because of the surge pricing. And that explains perhaps the strength in these stocks as well.
But Lata, I mean, logically, if you go by what the reports are saying, that the government is has said to offer SpiceJet, Jet Airways grounded planes. They're looking for some of these companies to bail out Jet Airways as well. Wouldn't that actually be a negative? I mean, who takes on Jet Airways' huge 8,000 crore debt? If any of it goes on to SpiceJet's books, isn't that a negative for shareholders?
No, I think we are getting ahead of ourselves. It will be, if there is someone to run the company, if there is clarity, then a lot of the problems get unwound. At the moment, it's almost imploding. Because more flights are getting grounded, more people have to be paid back because they've booked tickets. An airline runs on people booking advance. That's a big working capital for airlines. All that is not available to them. They will actually have to repay. Now, once there's stability and someone is running it, I don't know whether it's Ajay Singh or whoever, but the moment that stability is there, all that starts reversing.
No, my question is, if someone is running Jet Airways, the Jet Airways stock should move. Why is the SpiceJet stock moving? I mean, what is in it for SpiceJet shareholders?
Well, we'll have to wait and see. We'll have to wait and see. There is always, they're getting maybe pilots cheaper. Everyone is recruiting. We know that Indigo is recruiting. And less competition also. There'll be two players and not three players. There could be a whole lot of things, synergies, probably lower salaries for pilots because you can't negotiate. There are only two players, or three players, sorry. There's still Air India. I mean, I don't know how the logic will play, but at the moment it does look like, airline stocks don't give a damn that there are fewer people who are able to fly or flying. There is positivity in the air very clearly. All right, Ashwini, Mitesh, Prakash, thank you very much for joining us and staying through the pre-market. We'll touch base with you closer to 10. Markets in a fine mood at this juncture. The Nifty Bank in particular up almost 0.5%, and the mid-caps are now joining the party with a 0.4% gain. Advanced declines fairly healthy, 2 in the green for 1 in the red. With that backdrop, let's invite our market master, Krishna Kumar, the CIO Equities at Sundaram Mutual Fund, joins us. Krishna, good morning. Thank you very much indeed for joining us today. Well, there's no stopping the bulls at this juncture. Would you prefer large caps and FII favorites at the moment to mid caps, given the mood?
I think there's a big shift that's happened both at a global level in terms of a fairly strong risk-on trade towards the emerging markets, given that the expectations of Fed backing off has played true. You had Mr. Powell talking about no rate hikes for this year and reducing the pace of balance sheet contraction and ending it by September. You also had ECB kind of starting to get into the to kind of inject liquidity. So we are seeing a scenario where there is a huge scope for emerging market central banks to also start easing, given that inflation is fairly benign. So there is a lot of money coming into the emerging markets, given that dollar is definitely getting a little weaker. domestically, I think we are getting a little bit more positive from news flows on the election verdict, the direction of that, and continuity of policies. So these are, bringing in good times for markets across the board, particularly the underperforming large caps, which are at a good value zone across many sectors. And also, if you look at the mid and small caps, they have been battered down in the last 15 months. And so last 1 month has been a big respite for them, as people have turned a little bit risk on. So I would believe that there is a lot of money to be made across the market. So I wouldn't like to choose a large cap or a mid cap or vice versa. I think there are pockets of cyclical sectors where huge valuation comfort is there, and probably the bottom has been made in the last couple of months there.
Okay, well, the mid-cap end of the market is definitely inching up higher. Now a 0.5% gain on the index itself, and the advance decline ratio already has more than 1,000 stocks on the advancing side. So looking like a really good start.
No, I only want to get a 1 month chart of SpiceJet on board. I mean, it's like a 30% jump. It was 78 rupees just the other day. I mean, what, 2 weeks back, last week?
Yeah.
I mean, we have to get SpiceJet. Look at this. Just look at the monthly chart. It's what, 50% higher? 34, I can't see that. I think it's 35% higher. It was 78, I clearly remember. It was in the 70s, not very long back, about 2 weeks back. And it's shot up like a rocket. I mean, one doesn't know what confabulations and what maybe it's getting more roots if the roots are realigned. But this is a huge one. Krishna, how do you explain this? I mean, we were just reading out the very dismal aviation numbers for the month of February. It was 5%. It's a 5-year low. Of course, prices have surged, but all the airline stocks are flying high today.
Sure. I think there is a lot of consolidation happening, expected to happen in the industry because of the troubles that a couple of them have been facing. So you have seen that passenger yields have moved up quite well in the last 1 year. And also, as you mentioned, the capacity has shrunk because of the 737 issue. And also some of the issues with one of the premier airlines in India. So there is a sharp hike that's happened in pricing, and that's the reason, probably because a lot of airline travel also probably got shifted a little bit out, back to other modes. But the guys who are operating are making lots of money and have great pricing power, and with a lot of capacity that could be bought into temporarily or permanently. I think the guys who have the balance sheet are the ones who are looking good for the next 2 years.
Okay. Krishna, hi, good morning. In the funds that you manage, you have a large exposure to economy-facing companies, rural-facing companies like Heidelberg Cement, M&M Finance, PNC Infra, etc. What's the word on the street, and what's the anecdotal evidence suggesting? Is there a big slowdown in terms of growth, and will that affect earnings, not just in the end of FY19, but even in the first half of FY20?
See, I think a lot depends on how the infra cycle kind of moves, and also in terms of the rural economy, how things shape up in the next 1 year. The government has done a lot to place emphasis on certain schemes targeting both infra development and rural income uplift, basically. The valuations in most of these names and sectors you mentioned have been quite beaten down in the last 6 months. So there is huge valuation comfort, and also the fact that these are credible businesses and are run by good managements. I think there is a lot of value that is there in these companies and sectors. So I think we would think that post the election, cyclicals have a fair bit of positivity around them, and that's what the market is playing for. If you look at these sectors, the valuations pretty much are reasonable. The downside is limited because they have been on the decline for several quarters now in terms of stock prices. So I think the risk reward is definitely very favorable in these spaces compared to high growth, high PE, high multiple stocks that were the darlings of the market earlier.
Okay. Well, Krishna,
so there's a clear shift towards buying value and
yeah, please. Okay, go ahead.
Yeah, so I was just mentioning that there is a clear shift in the market towards buying more value than growth at this point in time. Given that there could be some uncertainty around the election time, I think the investors are positioning themselves into better valued stocks, lower valued stocks, and where there is good undervaluation, and also they could bounce when there is a good recovery post the elections.
Okay. Krishna, I wanted to ask you about auto sector. Will you buy into its current distress?
So I think the chips are down across all sectors in the auto market, and including exports also in a way. So I think these are good times to start adding exposure. Given that these stocks are basically are at probably 50 to 52-week lows, and you are seeing you've seen a lot of earnings downgrades in the last 6 months. At the same time, from our perspective, we have been fairly well weighted here, and so our incremental capacity to add here would be fairly limited, given that we already have a good exposure in some of the portfolios.
Okay. Well, I mean, this is a question I'm asking all the experts who are coming. If you have to handhold a Mindtree investor, how should he think? Should he think that nothing much will happen, there is just one big shareholder moving in, or should he worry that the top brass may leave? As fund managers have to take a call on this, don't they?
Yeah, I think we don't get into very stock specific views basically as per guidelines, but broadly to talk about a situation like this, I think companies where professionals have come together and grown a firm to a particular size of $1 billion and more, I think it is prudent that we look at backing the management which has delivered value over the last many years and has been investing in future value creation. So I think the key point in all these transactions are whether the existing management has the capability and the skill set and the bandwidth to take it to the next level. And if the answer is yes, I think we should back those managements. Okay. If the answer is that these guys require more external support and a better group, I think then you clearly have to support the latter. So I think that's how I think one should look at it when there is a bit of a hostile takeover. Yeah.
All right, we'll leave it at that, Krishna. Thank you so much for joining us and taking us through your view on the markets as well as the stocks that you have in your funds. For now, the market is fine, actually. It's just consolidating at these higher levels. The Nifty is holding at the 11,540 mark.